morning everyone, this is Amit Pabari, founder and managing director of CR Forex. One of the most asked question by all exporters and importers is why rupee moved above 83 levels. So there are various reasons for the same. Let me explain you that. First reason is Chinese currency traded near its 16-year high. Second, Japanese currency also continued to get weaker. Third, dollar index traded above 105 level and US 10-year treasury yield was trading near 4.30 level. Apart from that, crude also have put pressure on the pair. So the big question is whether rupee is moving towards 84 or not. The answer is it may not move towards 84. Let us understand why it may not move towards 84. So the reason number one is stronger domestic fundamental factors like higher growth, lower inflation, manageable fiscal deficit, lower current account deficit, and higher forex reserve. These are all factors which are indicating that rupee might outperform against other Asian currencies. Second important aspect is US economic data and Fed stance. In the coming week, core CPI data will come, means core inflation data will come. If the core inflation data is coming on the lower side and if the Fed is saying that they are not going to increase interest rate at a higher level, we will see a correction in dollar index. If that happens, it will be a positive factor for all Asian currencies and rupee. And the third reason is RBI intervention at higher levels. If you see the chart, RBI has been intervening at higher level and it is not comfortable allowing rupee to move above 83.25 levels. If the intervention continues, then we may see the pair moving towards 82.80 and 82.50 kind of levels in coming days. Now let us discuss outlook for rupee. They say when others get greedy, you should get fearful. That is what exactly happening in rupee. The entire world is suddenly become dollar bull and we all are expecting that rupee will move towards 84. Before making that conclusion, we should observe the following points. First, dollar index breaks the key resistance of 105.50. Japanese and Chinese currency continue to get weaker and their central bank do not intervene. Third, crude oil price continue to move higher and RBI do not intervene and rupee breaks a key resistance of 83.30 levels. At CR Forex, we believe that the probability of above event happening is between 5 to 10%, and contrary to that, there is a 90 to 95% probability that the pair will face tough resistance near 83.25 to 83.30 levels and the pair will gradually move towards 82.80 and 82.50 kind of levels. Now let us discuss strategy for thin margin exporters like agri exporter or chemical exporters. The rupee had made a low of 83.23 on 28 October 2022. After that, there has only been 7 instances where rupee has closed above 83 level, and on last Friday also it has closed below 83 level. This gave us two thought processes. First thought process is 83 to 83.30 is going to act as a very strong resistance for the pair. Second, it is very risky to keep unhedged position above 83 levels. So we will advise all thin margin exporters that they should continue to hedge 80 to 100% of their exposure between 80 to 90 to 83.20 kind of level. If anyone wants to wait, they should keep a strict stop loss of 80 to 90 or costing whichever is higher. Now let us discuss strategy for thick margin exporters like textile exporter or engineering exporters. A lot of thick margin exporters must be in dilemma whether they should hedge at current levels or they should wait for higher levels of 83.5 or 84 kind of a level. Our suggestion to them is till that time the pair is not closing above 83.30 kind of level, they should continue to hedge at the current level and they should maintain a hedge ratio between 85 to 90% if they are hedging on an order basis, and if they are hedging under anticipation basis, they should keep a hedge ratio between 55 to 60%. Now let us discuss strategy for importers. Importers should keep a stop loss of 83.25 for their near-term imports between 10 to 15 days, and ideally they should only cover the near-term imports and compulsory imports near 82.80 or 82.90 kind of level. For medium term imports, you should simply wait by keeping a stop loss of 83.30 as we are expecting the pair to move towards 82.80 and 82.50 kind of levels. With this, I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.